Jim Rogers said something this morning in an interview I saw. I don't know if it was, well, maybe it was recorded earlier, but he said something I always thought, and well, they was talking about Mario and a Super Mario, the one that's in charge of Italy, and the other one that's in charge of the European Central Bank. And the interviewer was asking him, like, the connection between Goldman Sachs. They used to work at Goldman Sachs. And he responded basically saying that, well, it's just, I know what you're trying to get at. There's trying to be a conspiracy, and, everything comes from Goldman Sachs. The point is, they couldn't cut it at Goldman Sachs. So, they're working for the government. And that is something I always picked up on. I used to see the college professors telling people, in accounting and business and finance, how everything works. And, how they used to work at PW, Price Waterhouse, back when it was Price Waterhouse. I'm laughing because my uncle used to call them poor workers. That's what PW stood for. But anyway, that was because they couldn't hack it there. So they went and worked for a college or they go in a government. That's where some people read too much into this conspiracy stuff. And, if they're at Goldman Sachs, what they're looking at, I don't know. Well, let me put it this way. I'm gonna play like I'm some kind of expert on Goldman Sachs. Far from it. But I had some very, very, very slight dealings with different things. Very slight. So I'm going to really lowball it here, okay? But the thing is when they're looking to buy something, they want to see an estimated flow of returns of income that's coming in from something, and they want to see proven returns, and then they want to buy it cheap. So those guys are 100% into making money, and they crunch numbers left and right. And yeah, I know there's a lot of stuff goes on. They try to fake people out, go buy this while we're shorting it or something, right? That type of stuff. But yeah, I would figure that. That's if you go back 100 years, and if you read a little bit about Jesse Livermore, the same story's been going on since day one, right? But we also got to apply that to people that are in a lot of areas, Jesse Livermore, somebody like that would never teach. He would never be on YouTube. He would never tell anybody what the hell he's doing. He kept his cards very close to his chest and never said nothing. Anybody, if you know which way the markets are going to go, you're going to jump in there, you're not going to say nothing, and you're just going to do it. I personally, I don't know. I just put my thoughts out here, but I think some of my ideas kind of make more common sense because I got totally tired of some of the predictions out there. I don't like the major media either, but I think the alternative media is steering people way wrong. And sometimes I'm also wondering about some of the gold and silver bug people with these astronomical predictions, because I think the little guy, for the large part, is going to be holding physical silver after it crashes. Now, where is that turning point? Yeah, I damn well wish I knew. I think it's going to be $400 or $500, maybe more dollars, maybe. But I might be overly bullish on silver. It could be 200, 150. I don't know. I think it's going up. I think it's a no-brainer. It's going to have to clear 100. But I don't know how much more. That's a big wide range, so that's not very helpful. But I just want to say that you probably should always do. I still like the idea of doing things in steps. You don't get as much money that way if you guess the entire top. But obviously, who the hell is going to be able to do that? That's almost impossible unless you're very, very lucky. So securing profits in steps provides a little discipline to the game, and that's probably the best way to go about. And I just wanted to point out about that comment on, I heard from Jim Rogers, because I always saw this stuff, the guy worked for Goldman Sachs. Why the hell is he a bureaucrat in Europe, right? Why is he working for the government? Why is he doing this? Why is he a teacher, Why not be in Goldman Sachs making more money? It's because he couldn't cut it. He got chopped out. And that's the same case with a lot of people, so I don't know. What can I tell you? Um, the other thing is, obviously, if the guy went out on his own and he wasn't working for Goldman Sachs because he figured he was going to make more money doing stuff on his own, that's a whole nother story. That's a whole nother story altogether. But usually when you see them both working for the government or to go in some college or university, that's not the deal. That's not the deal at all. This was regarding the euro. Right now, the euro looks like it's smooth sailing, but it's down because I think they downgraded some of the Italian bonds. It was Moody's that did it, but it's down. It's down. What surprises me today is that oil's moving up and the metals are kind of moving down upon the Euro news. Well, the metals are pretty flat. I mean, they're not moving down extremely so as far as gold and silver, but platinum and palladium are. And to me, that doesn't quite make a hell of a lot of sense, but, it's the markets. What can I say? Markets don't always make sense. If they made sense, you'd be able to predict them. But I do think that if this Euro news holds out, where it's looking bright for the short term, that gold and silver is going to follow in the short term. But I also keep thinking that it's going to be the yin and yang. So I got one bet in on USLV, not for a lot because I don't trust it right now, and I'm holding positions on PSLV. So if I see a gain on that of a certain percentage, it's gone, and I think it's going to go down. But I'm definitely not shorting silver now. I only did that when the stuff was in a good crash, and I caught a piece of it. That's it. I don't like short silver. I mean, I don't know. Some people may be a lot braver than that, but I will not short silver unless it's like catching a piece of a trend that looks pretty solid. Otherwise, I'm not going to try to guess this on a daily basis. I think that's nuts. But I will try to guess as far as, smaller plays. I don't think it's a good idea to trade in and out for the largely. That's not a good idea. But common sense goes a long way. Secure your gains in steps. I still say that. It's going to be a while, but it's going to happen. And I'm going to point out a couple common sense things why. But first, I want to get into this Euro thing because my belief is that this Euro arrangement that's going on with Greece right now is going to have a hiccup. Why do I think that? Because every time the news is good, it turns bad. Just give it a few days. It's like the weather. This thing is going to affect the markets, and that's why I would sell off the USLV on even a small gain if it hits it. Greece's bid for a new bailout got close inspection on Tuesday from Eurozone officials poring over the details of the Athens budget to decide whether it had met conditions to get the money. So, they're really like going over the fine-tooth comb. So I think they got to do a vote on Wednesday. So, senior Euro Finance Ministry and Treasury officials, collectively known as Eurogroup Working Group, have decided if Eurozone finance ministers can sign off on a financing program when they meet in Brussels on Wednesday. But there's some other things going on, that there's some other people that are in the political system, like Antonius Samaras, leader of the Conservative New Democracy Party, which is heading the polls, are elected to do so with elections expected in April. So there could be something going on with this. There could be something that's going to change the whole scenario even this week. So that's why my short-term bet will be out of there very fast if it works out. If not, I'm going to hold till whatever happens, because I think silver is going up quite a bit, and I'm going to get into some basic facts. Here we go again, my hero Eric Sprott. Okay, the founder of Sprott Assets Management has repeatedly said that gold was the investment of the last decade, but silver will be the investment of this decade. And by looking at some of his fundamentals, he may just be right. Now, fundamentals are one thing, but panic and psychology are another thing altogether. Panic's going to drive it up. Panic's going to drive it down. But I can't ignore this fact, and this thing has been something that has been telling me that silver is going to fly this year, and that is not just the gold-silver ratio, or whatever you call it. This is silver-gold ratio. They got it backwards on this chart, but it says there is currently an equal amount of investment money going into silver as there is for gold. Yet the gold-silver ratio is close to the silver-gold ratio. Actually, is close to 50 to 1, which means that investors are buying 50 ounces of silver for every ounce of gold. Not only that, but there's nowhere near close to that much silver available for investment as there is for gold. That is the glaring fact. The money's pouring in 50 to 1, 50 to 1, and there's way less silver available for investment. Now you know what the hell's going to happen there. That is common sense, no-brainer, slam dunk. Silver is going up a lot. Now, you also know they lowered margins, and they also put out all these triple leverage, double leverage funds. Well, it probably wouldn't be too scary to even hold in a triple leverage fund right now, even though I think there's going to be a little bit of a pullback. But if I see a pullback in leverage on silver, I'm probably going to go in harder on triple leverage silver and hold. And it's going to drive me nuts, but as soon as I secure good gains, it's going out of there in pieces, as I usually do. So that's what I think. But on a day-to-day basis, it's not cool to look at it all the time. But I'll do different trades on different things depending on what it is. And it is guessing. It is. But I try to apply a lot of common sense. But this chart I found very, very interesting, because when they're talking about the money that's going into silver, 50 to 1, or 1 to 1, the money is 50 to 1, but it's 50 ounces of silver being sold for every ounce of gold. It's the same amount of money that's pouring into silver. Most of it's going into coins. Which tells you, yeah, I know right now there is no physical separation. There's no separation between the physical price of silver and the price on the market. What I think is going to happen is, if they separate, it's not going to be for a while. I don't know when the hell it would happen. On the market, the spot market is going to go way the hell up. On the market, the electronic market, it is going to go up. But since they can raise margins again, since they lowered them, they're going to knock it down, and they're going to have all this leverage in there and all these funds out there that all these little investors can get into. You know, I remarked about the triple leverage and stuff. If silver pulls back some more, my bet, now, I'm a guy that doesn't know. I'm using common sense, though. My bet would be to go into it more if silver pulls back and hold and get rid of it in steps. But I'm not going to try to go for any pie in the sky, returns. I mean, well, gets 50%. I'll take that. That's good. Anyway, that's. But silver might, it might get triple. It might get triple if silver's going up to these crazy amounts of money. I wouldn't probably be holding out for that. I'd get rid of most of it before then. But this chart tells you very, very clearly that more money's pouring into coins. People are wising up. And, it wasn't that long ago. It was only 50 years ago. When you can get $1, it was a silver dollar. It was a silver dollar. So it's not that long ago when actually silver was used as the actual money. And my advice on coins, because, well, I didn't do this actually. I got a lot of Philharmonicas because there were less money and things like that. I got Indian heads, and those ones from what the hell is that place up there in Utah? Quality Silver Bullion, a guy I trust, and I like the way the coins look. And I got Silver Eagles, but in retrospect, I think a no-brainer is to invest mostly in American Silver Eagles as your #1 choice. That should be the coin, because it comes from the U.S. Mint. I know there's a converse argument to that too, and I kind of bought into that. If it comes from the U.S. Mint, maybe they can take them back somehow or something. I don't know. I don't know. You really, really don't know 100%, and that is the reason people diversify. The reason they diversify is because they don't know. They don't know, and that's really what it is. And quite obviously, you are playing a card game. It's some people are going to win, some people are going to lose. That's just how it is. That's just how it is. Now, as far as people holding coins, and not say, for instance, everybody in the United States decided to just hold silver as money, silver and gold, and refused the fiat money, then in actuality the power would return to the people and you would break the banks in a second flat. If you actually refused that money, you'd screw them up. You'd screw them up. But the point is also that people can't be thinking about get-rich schemes, and they can't be thinking about things that don't produce something, because the reality is, and this is where I'll get on two sides of things. Like, I'm mainly in accounting and I like the finance and I like the numbers, but I stick in with being able to do things myself like any average person can do, whether it's mechanical construction, plumbing, electrical, that type of stuff, roofing. I'll stick in with that kind of stuff because I realize that in reality the real economic engine is that stuff. It is those things. It is those things. Everything else is a representation of those things on a piece of paper. And I realize that 110%. That's why I stick in the both. But I don't think that, I think the elite are going to play the average person pretty well with this stuff. And you're going to be thinking that it's like almost like a two-sided thing that's coming at the average person. You have the silver people that are heavy into silver who want silver to go up to $1,000, $2,000 an ounce, and it may if there's a lot of inflation. In real dollars, not in a million years. And talking about if inflation. And believe me, I do understand the fundamentals, and I do understand enough that if it went up that much in real dollars, the demand would be destroyed. So they're playing people that are investing in this stuff in two different ways. And you don't want to be on the wrong side of the curve. But I also do like the concept that if everybody holds silver and gold, you will actually destroy the bankers. That is a fact. You will. You would. But that would require actual real work. And I think the problem is there's a hell of a lot of people in the United States that don't want to do that stuff. And personally, I like sticking in with some of that type of stuff and the accounting and finance. I do both. But looking at this chart, with the 50-to-1, 50 ounces going off the shelf for every ounce of silver of a gold, 50 ounces of silver going off the shelf for every ounce of gold going off the shelf, and most of that being coins. If you're holding coins, you are definitely in the right place to be, and this spot market is going to go up very high. Now, so I will probably, if I see $75 an ounce or something or more on silver this year, there's going to be sales of some physical silver coins, because I think there will be a pullback. But that might not be the right play, but I'm looking to get as much as possible. And let me put it this way. There's plenty of people out there with a shitload of money. They never worked for it, and I like to take it from them. I'm not trying to take it from the little guy. Remember that.